All right, members, this is our Understanding How to Trade Fractals course. So we'll be looking at how to trade fractals. This whole course is going to teach you how to really use fractals for your trading, how to understand the market structure, how to use them as support and resistance, how to trade the fractal bounce, the fractal break, first fractal break, and so forth. So it's going to be very educational. And you also learn how to use the 1, 2, 3 pattern and the measured move, which is the 1, 2, 3, 4, the continuation of the 1, 2, 3. So you'll learn all that in this session. So we're going to start off with just understanding the fractal, what it is, and also in this session here you'll understand how to use the 1, 2, 3 and the measured move 1, 2, 3, 4 AB equals CD. Alright, so fractals are tools of technical analysis developed by successful trader Bill Williams. Fractals define very complex and chaotic structure of price movements into smaller waves. As such, they can help us define order and structure in the markets. Many people believe that the markets are random. However, many others argue that although prices may appear to be random, they do in fact follow a pattern in the form of trends. Fractals essentially break down larger trends into extremely simple and predictable versal patterns. So Bill Williams believed that in order for you to make money in the market, you first must be able to understand the basic market structure by being aware of the market's internal parts, which he called dimensions. So these dimensions include the following: the fractals, which is the phase space; the zones, which is the phase energy and force combination; the momentum, which is the phase energy, deceleration, acceleration, the phase force; balance line, which is the odd attractors. So we're going to be focused on the first dimension, the fractals, along with the momentum, which is the third momentum, the third dimension. So a fractal pattern on a bar or candle chart on any time frame consists of a minimum of 5 consecutive bar or candles. So it's going to be 5 consecutive bars or candles. So for the sake of this study, we'll be using candlesticks. The middle candle must have a higher high or a lower low than the 2 preceding bars and the 2 following bars. If a candle high is parallel to the middle candle high, or its low is parallel to the middle candle low, it does not count as one of the 5 candles in the fractal sequence because it does not have a lower high or a higher low than the middle candle. So fractals do not repaint. Once a fractal, always a fractal. So here you see a fractal is created with a series of 5 candles. Bull fractals are created when there are 2 consecutive candles on each side of the third candle with lower highs. Here's your third candle, 2 consecutive lower highs on each side. Lower high, lower high, lower high, lower high. Bear fractals are created when there are 2 consecutive candles on each side of the third candle with higher lows. All right, third candle, higher low, higher low, higher low, higher low. This develops after this candle closes. When this candle closes and this opens, this shows a fractal because at that time it is. But if this happens to close lower, the fractal goes away. So it doesn't repaint. It's a fractal at the start and it has to remain that way and close that way. If it doesn't, then it changes. And that's the only time you'll see it change. That is not repainting. That's not the full fractal developed. Shared fractals are bull fractals, but the same formation also creates a bear fractal on the same candle. So this happens because the 2 preceding bars and the 2 following bars are inside bars. They fulfill the requirements that the middle bar must be the highest or lowest in the 5 candle sequence. So here you see a shared candle, a shared fractal, all right, because you got a higher low, a higher low. Sorry, you got a higher high, a lower high, a lower high, a lower high, a lower high. But then you got a higher low, higher low, higher low, higher low than this middle one. So whenever you have a bear fractal followed by a bull fractal, you have bullish momentum. So here's your bear fractal and the momentum went to the upside. That's bullish momentum. Opposite is when you have a bull fractal followed by a bear fractal, you have bearish momentum. The market moves to the downside. And then whenever you have a shared fractal, you have no momentum in the market for that time period. So let's take a look at some examples of shared fractals and see what you notice. So here's your shared fractals. Do you notice anything? Okay, how about now? So here we can see two shared fractals within this 10-bar sequence. You have two shared fractals. Do you notice anything? Well, what you should have noticed is that between the shared fractals, the market is ranging, and there's no momentum in the market at this point. So those shared fractals can tell you something about the market and also help you not to make a bad decision. So fractals help us to see and define the underlying market structure. Knowing the underlying market structure can give you a tremendous advantage when trading. So what is market structure? Market structure simply refers to the market's directional movement. We know that the market can only move in one of three directions. The market can move up, down, and sideways. This concept seems very easy, but in reality, many traders do not know or understand the directional movement of the market. And we then see them losing many trades because they do not understand the full direction of the market. Plus, when you look at a chart, you want to look at the full market. You want to see a big view of the market, not just a few candles. So fractals are the key elements of market structure, as the price creates bull and bear fractals through its normal path of ups and downs. So let's first define the structure of a bullish market. The first bull fractal is broken by price creating an upward move. Right here we broke this market, we broke this bull fractal. Creating an upwards move, you have momentum to the upside. And then the subsequent bull fractal break confirms the bullish move, creating a bullish trend. You now have another bull fractal which was violated. So two violations really signify that the trend has started, but that doesn't guarantee that the trend has started. And price continues moving higher, continually breaking bull fractals. In the process, bear fractals are barely broken, if at all. Now you can break bear fractals, but usually you're going to see a lot of times the market just doesn't break bear fractals when it's moving to the upside. It may come down to a bear fractal and that holds as support. And this structure continues until bear fractal is broken. Once that bear fractal is broken, that's a first fractal break right there. The market structure changes to bearish. So let's now define the structure of a bearish market. Based off of this first break, as you can see, the market continued to the downside. But the first bear fractal, which is the first fractal break, is broken by price creating a bearish move right here. The subsequent bear fractal break confirms the bearish move, creating a bearish trend. So you break the first fractal, the next bear fractal, and you see you haven't violated any bull fractals in the process. And then you violate the next bear fractal, and price continually moves down, breaking bear fractals. In the process, bull fractals are broken barely, if at all. You could see no bull fractals were broken in this move to the downside. This helps you out a lot. If you understand that concept, that can save you from trading the wrong direction most of the time, because you could see the odds, what the odds are for it to break a bull fractal in a bearish trend, or in a bear fractal in a bullish trend. The odds are rare. All right. So let's now define the structure of a ranging market. So a ranging market is one that is bound between support and resistance levels, as you can see here. The fractal structure in a range shows clusters of both bull and bear fractals, such as point A and B and the red arrows. So point A and B, you see many fractals here, but then you see a bunch of fractals here broken in different areas and not really defining anything. All right, that lets you know the market's consolidating, ranging, or whatever. In the two ranges marked A and B, we see the market violating both bull and bear fractals with no consistent direction. So you should always start off by analyzing the market structure and determine the direction of the market. Ask yourself, is the market breaking bull or bear fractals? Or is it breaking bull and bear fractals? Most likely, if we are breaking bull fractals, the market is bullish. And if we're breaking bear fractals, then the market is most likely bearish. If you see clusters of fractals and the market is breaking bullish and bearish fractals, then we are most likely ranging or consolidating. So fractal support and resistance. What is support and resistance? So basically, to understand fractal support and resistance, you need to know the very basic concept of support and resistance, what it is. Support and resistance levels are areas where the market failed to continue the move higher or lower. Support halts a downtrend either short term or for a longer period, and resistance halts the rally either temporary or for a long period of time. The primary reasons why prices behave in this fashion is due to supply and demand and market psychology. At support levels, the number of buyers generally exceeds the number of sellers and pushes the price back up, and at resistance levels, the number of sellers exceeds the number of buyers, causing the price to go back down. Fractals are a great way to identify these levels. All right. So every fractal level is a minor or temporary level of support and resistance until the level is confirmed with a second failure, creating major support and resistance. So here you can see you have fractal resistance at 98,396. The market returned to the level 59 days later, and the level is now confirmed as a major double top resistance level. When a bull fractal level is violated with a close above, this level now becomes a minor support level. So this level was violated and it now becomes a minor support level. Before the market broke through here, it was a resistance level, a minor resistance level. Now it's a minor support level. When the market returns to this level and confirms the level as support, this level now becomes a major support level and a great level to trade with the trend. This is one of our most basic trades we're going to learn is the fractal break bounce trade. So the fractal bounce, this is a bullish fractal bounce trade. All right, so the fractal level support and trade level. On the other hand, when a bear fractal level is violated with a close below, this level now becomes a minor resistance level. So this level is minor resistance right now. But when the market returns to this level, all right, the fractal resistance level is rejected and prices drop, continuing with the overall trend. This is going to be a major concept when trading fractals. Again, it's just another bear fractal bounce. So every trend begins and ends with a fractal. You can see this big trend started. This trend ended with this fractal, and the new trend started with that fractal. And then the market continued to the downside. This trend ended and this trend started with this fractal. But how do we know if a trend is beginning or ending? How do we know that this is the end of the trend right here and this is the end of the trend right there? There are some clues that we can look at. Let's see. We're going to use the 1, 2, 3 pattern. So you can see a 1, 2, 3 pattern from 1, 2, 3. So I told you that trends begin and end with fractals. The 1, 2, 3 reversal also begins and ends with the fractal. On a bigger scale, a trend begins and ends with the 1, 2, 3 formation. This is why the 1, 2, 3 formation is known as a 1, 2, 3 continuation or a 1, 2, 3 reversal. So I'm going to show you how to use this formation to your advantage. So here's a bullish 1, 2, 3 pattern. Using the fractal levels for a bullish 1, 2, 3, 1 is the lowest bear fractal, 1. 2 is followed by a bull fractal. So 2 is a bull fractal. So you got the bear fractal followed by the bull fractal, and then 3 is followed by a higher bear fractal than the previous bear fractal. So you have a higher bear fractal than the previous, which creates the 1, 2, 3 pattern All right, and this is usually our area of trading just based off of the way we do it. All right, so even if you didn't know that we're trading the 1, 2, 3 level, this is automatically our level of trading. This is the most successful level that you could trade at because it's usually the end of the pullback move and back in line with the trend. So the 1, 2, 3, the violation of level 2 confirms the move. All right, so when you violate the 2 level, it confirms the move. And failure to violate 2 usually signifies trend reversal and a move in the opposite direction or ranging. So with a violation of 3 to confirm the reversal. So you have 1, 2, 3 confirms the reversal move. All right, so let's go back up here. So 1, 2, 3 with a violation of 2 confirms the continuation move. So 1, 2, 3 continue to the upside because we started, this is the beginning of the trend right here. This is the end of this trend, the beginning of this trend. So if we're looking for a move to the upside and we want to know this trend ended, we go 1, 2, 3, because now you can't see the 1, 2, 3 in the opposite direction because you would be looking at your top. So you're going to go 1, 2, 3. 3 violated 1 right here. When 3 violates 1, that's the end of the move and that's over with. So then now you have 1, 2, 3, and in order to confirm the move and continue to be continuation, you have to violate 2, and it violates 2. If it does not violate 2, failure to violate 2 usually signifies that a trend reversal and a move in the opposite direction, and that's how we notice, because we have 1, 2, 3. We want to see 2 violated. Here 2 was not violated. All right, therefore we had another fractal develop, so we started counting 1, 2, 3, and then break. All right, as you could see. So now it's 1, 2, 3. We broke 3, so now that confirms that there's a trend change direction. So the bearish 1, 2, 3 pattern, using the fractal levels for a bearish pattern, you have 1 is the highest bull fractal, 2 followed by a bear fractal, and 3 followed by a lower bull fractal. So your lower bull fractal is 3. All right. Failure to violate level 2 usually signifies trend reversal and a move in the opposite direction. So this is where that trend starts. So you got 1, 2, 3, and we need to violate 2. If we fail to violate 2 and we violate 3, then we realize that the market direction has changed. And that's the best way to understand that the change of the market structure has started, along with this first fractal break, which is going to help you to understand the change of direction. So other than that, you're not going to really know that the direction has changed on the market. All right, so the bearish 1, 2, 3 pattern again showing the violation of 3 to confirm the reversal. So all along we were looking at this trend to the downside. So we were counting 1, 2, 3 and expecting to break this level 2 right here for a 4. So 1, 2, 3 and back down. But the market failed to violate that 2 and instead violated that 3, which confirmed the reversal of, instead of this way, we now reverse and basically confirm the continuation of this move. Confirm the reversal of this move and the continuation of this little move to develop into a bigger move. Point 2 is known as the fluctuation level in Ichimoku wave theory. If price fails to break this level, we usually see a ranging market between points 2 and 3. So price needs to violate this level, and if it doesn't, so when price comes up to this level and it can't violate it, that's when you start to see ranging. Not just when price fails to violate 2, it'll usually violate 3. But if price comes up to 2 and fails to violate 2, that's when you start to see a ranging market. So if price fails to break this level, we usually see a market ranging between points 2 and 3. as you can see, between points 2 and 3. Here we were from points 2 and 3, same piece of market, and as the market went on, you could see it was it ranged. It failed to break 2 and failed to break 3. Eventually it'll break out of there, but at this point you now know you're in a ranging market and you have a great opportunity for yourself to trade these ranging markets on a lower time frame. So many traders are taught to trade the 1, 2, 3 pattern at level 2 as shown below, but this is the area of most risk. Okay, so many traders, you have your 1, 2, 3 and then they enter at the break of 2. This is the most risk of to trade this level. All right, so we're not and will not trade the pattern, but instead use the pattern to locate our trade levels. All right, our entry will be located at point 3 rather than 2. We will not trade point 2 level, but there will be a time where we will, and we'll discuss that. That's only going to be when the market is in, when we go to a lower time frame, and I'll show you what I'm showing about that. So now, contradicting what I've just said earlier, we can and will trade the 1, 2, 3 pattern when price on the daily reaches our 3 level. We then go to the 4-hour time frame on the next slide, as you're going to see. So basically you can see the 1, 2, 3. We're at our 3 level where we look to trade, right? So we're looking to trade at the 3 level. But instead we can go to the 4-hour time frame. All right, so we find the 1, 2, 3 pattern on the lower time frame and trade the violation of the first 2 level on that lower time frame. But don't worry, we'll discuss this and how to trade this on the charts. All right, so here you can see the bigger 1, 2, 3, which is this 1, 2, 3. That's the daily 1, 2, 3. So when I go back here, this is that daily 1, 2, 3, but on the 4-hour time frame. So now on the 4-hour time frame, I'm looking to go down, because when I looked at my daily, I said I'm going to bounce off of this fractal and trade to the downside. But how can I enter? Now I could have just entered with a break below this rejection level, but also I can, and always you're not going to get price action like this to give you a clear-cut entry. So sometimes you need something to help signify your entry. So in that case, you could go, you may not see a good entry. So when you go to the 4-hour time frame, you still have that big daily 1, 2, 3, and we know that on that daily we're looking to break this 2 level, but we're looking to get in up here. So in that case, we see the 1, 2, 3 on the 4-hour time frame. We would enter short at this level right here, and you can see the market breaks and we're in the trade to the downside. That helped us to get into our daily fractal bounce trade. So a lot of times a 1, 2, 3 turns into a measured move, which is a 1, 2, 3, 4. All right, 1, 2, 3, 4, which is AB equals CD. Usually a measured move is where 1 and 2 are the same length as 3 and 4, and they usually say A and B is equal to C and D. Same thing. So what's a measured move? The principal aim of a financial trader is to attempt to obtain information that can provide some confidence in the immediate future of the markets. This is often based on repeating patterns from the past, patterns that are ultimately based on the interplay between greed and fear. One of the principal concepts of this aim is based on the observation that there are waves within waves. All right, so the measured move pattern is just an extended leg of the 1, 2, 3 pattern, which creates an N wave in the market. The measured move is a pattern that shows the market has the tendency to move in similar price structure as to how it moved in the past. Not just the price distance, but also the time needed to reproduce the same move. So that also falls in line with our time analysis based on our Ichimoku advanced time analysis theory. All right. So the measured move, just like the 1, 2, 3 chart pattern, is found in all markets and in all time frames. So price starts from bear fractal 1, all right, and rallies to bull fractal 2. Price then corrects down to bear fractal 3, and then finally rallies to a new bull fractal high at 4. So you have 1, 2, 3, 4. That's a measured move, A, B, C, D. So it shows here A, B, C, D. The CD leg is always measured against the AB leg. So the CD leg should be equal to the AB leg. And here we see the AB leg was 356 pips long, 356, while the CD leg was 336 pips long. Just like 20 pips shorter. All right, but basically it helps you to understand where that market is going. And the 1, 2, 3, 4 pattern, or the AB equals CD pattern, is going to be used to help you to find your targets, not to enter any trades or anything else. So here we see an AB leg which was 274 pips long, and the CD leg is 281 pips long. They are right in line with each other. A, B equals C, D. A, B equals C, D. So from C to D, this is 281, and from A to B, this is 274. Pretty much the same. And then you also count your time analysis in there. So on this chart, you can see the 1, 2, 3 formation, which creates a V wave in the market. The V wave is not a complete market move. The market has to do more. It can't just continually make V waves. I mean, it basically can, but the ending or result is always going to be your N wave. So here you can see a completed market move with the 1, 2, 3, 4 pattern, or the AB equals CD, which creates the N wave in the market. The market is made up of all of these N waves in every move. A, B, C, D. You're going to see this through the whole market. So since the measured move AB equals CD is an extension of the 1, 2, 3 pattern, we can then use the measured move to determine price targets. So A, B, C, D. So if we enter at our 3 level, then we kind of know where our 4 level is, and that's where we trade to, and that one was basically at our 2 level. So in this chart, we see a 1, 2, 3 pattern where price broke a bull fractal and returned to the fractal and created point 3 at fractal support. 1, 2, 3 fractal support. If we enter our trade at 3, we then can use the ABCD pattern to determine our target. So it's going to be A, B, C, D. We're looking for that CD leg. Where is it going to go? That's what we're looking to trade. So that target would be, if you just figure it out, the same amount of pips would go from here to there, which would be 103, 1.03260 for your D target. So you could see 1.03260 right on the nose pretty much. So in order to find our AB equals CD, we use our fib extension tool. A, B, C, D are 1, 2, 3, 4. So set your tool to match the numbers in the red square boxes. The one level is 100% and a complete measured move. So the measured move is usually based off of the 1-to-1 ratio, which is 100%. The other numbers are taken from Ichimoku observation theory. So I have 0, 0.927, 1.0, 1.221, 1.611. Those are going to be my targets based off of Ichimoku observation theory, and the measured move is 1.0. So you will have different numbers on yours, and if you don't change them, you won't have the same number, but more than likely you will have the measured move level, which is an N wave, which is going to be where we shoot for with our Ichimoku observation theory, our N target. So grab your tool and start at point A, right? And then extend to point B, and then finally to point C. This gives you our D target at 103.260. So if we would have taken the bullish fractal bounce trade at C, we now know where our target is. So if we take our fractal bounce trade where the market broke this fractal right here and came back to this fractal right here, and we enter on this rejection right here. So if we entered the trade right here on the rejection high, now we want to know where to go to. Well, quite naturally, we always got to go through point 2, or B, and then we're looking for point D, sorry. So D target is going to be at 103.260. Okay, so these are the tools that we'll need to trade fractals successfully. So the next unit will discuss the fractal trade setups such as the fractal break, the fractal bounce, and the first fractal break trade setups. So hopefully after this session here you understand a little bit more about fractals, but also the 1 2 3 pattern and the 1 2 3 4 or ABC equals AB equals CD pattern, because that AB equals CD pattern, or the measured move, whatever you want to call it, 1 2 3 4, is going to help you to find your target. And also understanding that 1 2 3 and continuation or reversal, that should help you to understand, is the trend continuing or ending. So those are going to be important concepts. So hopefully that helped you. I'm going to end this session here, but guys, your next session is going to really teach you how to start trading this. So we're going to go to the fractal break trade setup after this. All right, and then after that we'll learn the fractal bounce trade setup. All right, so thank you guys, and see you in the next session.